It is my honor to be here with distinguished panelists. We have one missing. She will be here soon, hopefully. But before we open up the questions for discussion, it would be good, I think, for all of you to introduce yourself just very quickly of what you do, and then we'll go from there. So, Catheryne, why don't go ahead.
Okay, I'll kick things off here. So my name's Spencer Bogart. I'm a managing director, head of research at Blockchain Capital, formerly of Needham & Company, where I was writing Bitcoin research. That's a little bit about me.
I'm Thomas Franz, so I'm co-founder of Ledger. So Ledger is a French-American startup that's the leader in blockchain security solution. So when we started in 2014, blockchain was Bitcoin, basically, and we designed a hardware device to secure Bitcoin private keys. We sold 100,000 of them in 130 countries, and now seeing some traction also in the enterprise market.
I'm Catheryne Nicholson. I'm CEO and co-founder of BlockCypher. BlockCypher is a web services company, APIs basically. We like to say we're like AWS for blockchains. We make it easy for developers to build blockchain applications.
So Catheryne, maybe I can start with you. So how do I think about blockchain? What are some practical examples, if you can, think about? And again, our panel is very much around Bitcoin, blockchain, and capital markets. So around those, what are some of the practical view of to look at it?
So what I hear often is, what is the killer app, or what are the various use cases for blockchain? And everybody's searching for that. I think that if you look at, from a practical point of view, you have to look at what makes blockchain different than any other technology that's currently existing. And what makes it different than a database? Asif, you and I had a conversation on this.
The other day,
You know, fundamentally, what makes it different is consensus. And it's consensus on a massively distributed environment in which everybody in the network agrees that that is that single source of truth. So if you look at from a practical point of view, when you're looking for single source of truth, when you're looking for immutability, when you're looking for agreement, those characteristics apply to identity, apply to payment, and apply to anything in which you want to transfer value.
And another thing, maybe, Thomas, you can add on that is keeping with that question, how do you scale? What are the things that you're looking at within that, again, keeping the practical part in place, but also scaling it? How do you scale?
Well, before scaling, you need to actually find some use cases. The first thing is about looking if a blockchain architecture is actually useful, solves the problem. Does it meet this requirement? Is the database just good enough? And the use cases that we see right now where there is this product market fit, it's generally kind of outside the back office of a financial institution. It's mostly for permissionless ledger. And for that scaling part, right now there's some issues about it can only have like that amount of transaction per second. But again, that's just the beginning of the technology. There's some hurdles to overcome, but it's not impossible to overcome them. It's just a nascent technology that will need time to find the right way to scale. There are some experiments. There are some roadmap to be able to achieve these hurdles. So it's just a question of time to get to some other levels of scaling to scale to order of magnitudes more capacity than right now.
Awesome. Do you want to add same question?
I think that's very reasonable about how to scale blockchains.
Yeah.
I mean, in general, it's hard whenever you move to a decentralized architecture that requires people, thousands of nodes, tens of thousands of nodes around the world to come to agreement on something. There's a real economic cost to doing so, and there's an efficiency cost to doing so. I think that probably a lot of the promising scaling solutions will end up looking more like point-to-point solutions that settle on a global distributed blockchain.
Maybe I'll stay with you. So what are the companies, if again, looking at capital market, what are the companies that are ripe for disruption? If you think about blockchain, if you think about Bitcoin.
Sure, certainly.
Exchanges.
Yeah, absolutely. So if we think about kind of the origin of blockchain and we think about Bitcoin and we think about how it's great for moving value, I mean, I think the natural targets for disruption are going to be people that make their business around moving value. Outside of that, if we look towards, some non-financial services type applications, I think that gaming could be another really promising area.
Yeah. What about macro market structure, right? I mean, we are seeing so much with what happened in UK with Brexit, followed by US, and everything that is happening. Do you see an effect, if you will, of blockchain, good, positive, or negative in there? And maybe.
Yeah, absolutely. I mean, I think that, so overall, how do macroeconomic conditions kind of play into demand for digital assets, and maybe Bitcoin in particular? Macroeconomic turmoil is pretty much always a bullish sign for Bitcoin. Just before the panel, I was discussing this with a couple people that, that was when I found out about Brexit, was because I'm compulsively checking my Bitcoin price, like so many people in this room probably, and all of a sudden I see it jump, and you know that something's going on. Flip over to Google News and see what's happening. So, macroeconomic conditions certainly play in. I mean, an anecdotal story on that note is I communicate regularly with a doctor down in Brazil, and, he has a very successful medical practice, but he's now converted that 1 day a week into a Bitcoin consultancy where he helps move people into Bitcoin. Those people largely want to buy because they're terrified of wealth confiscation right now. They're looking at a big public deficit, and there's a history of wealth confiscation straight from people's bank accounts, and so they're trying to find other places to put it. So those are just a few examples of how kind of broader macroeconomic conditions can really play into demand for digital assets in Bitcoin.
Thomas, any comment on that? And maybe perhaps you can add macroeconomics and security also to that angle?
Yeah, well, definitely for those type of assets, Bitcoin being one of them, it's really compared as some type of digital gold, something that is outside the scope of jurisdiction and regulation. So it has, just like gold, these characteristics that are interesting for investors. It was for a long time, I think, only for like retail investors or people all over the place that could use Bitcoin as a way to safeguard some of their assets. And more it's becoming something for most sophisticated investors. For like the global value of cryptocurrencies is hitting something like 80 billion. So it's significant enough for hedge funds, for high net worth individual, for family offices to see that as an investment class as part of their reserve portfolio mix. So and the impact of macroeconomics on reserve currency is about the same as on crypto.
And before you give the microphone to Catheryne, one thing, since from a security perspective, can you talk a little bit about digital identity, right? I mean, that is becoming so massive overall as a topic beyond blockchain as such. Is blockchain some sort of enabler in that sense? Do you see digital in where it sits? Yeah,
having a Bitcoin, having a token on a blockchain-based architecture is actually owning a private key. And it's a first example of an identity that has some direct value. So you know that if you lose that identity, that private key, well, you lose all your assets. And as I said, it's about 80 billion total. So there's some people who have like quite a lot of assets in form of those tokens. So these private keys are their digital identities to access those funds. Also, people are willing to indeed pay the price to secure them. And I think that's a first example of those types of digital identities. And based on the same technology, you can have a lot of different use cases where you can, for example, have all your information that are logged on some type of blockchain, and you have got this private key to be able to prove that this is you, that this is you made your KYC, you're able to log in a different service. So definitely that is a big enabler, and it will move forward for sure.
Catheryne, I just want to build on the question that was asked around what it means from a macroeconomic perspective. And again, what I'm seeing in the financial services is a big aspect of macroeconomic, of what it means, of different elections, different, all the new threats that are coming in, so on and forth. How do you see all this shaping up, in what you do from and another big aspect that in financial services is the silo approach. What I mean by that is that big firms, the Googles, the Apples, and again the banks and all that are vested globally everywhere. they want to continue to do that, but at the same time, they want to have that plan B that if for some reason they want to become sort of in a silo, does blockchain in some way, shape, or form help them in that?
So in regards to the question of does it help a global company remain in a silo, I don't think so, because I think where the value is for blockchain technology is actually breaking free of the silo and not having those effects stay. Because when you talk about permissionless or a trustless environment, you don't have to ask permission to be a member of a silo or a member of a consortium. Yeah. You can just participate by having control of your private key. Yeah. You lose control of your private key, you lose control of your value, you lose control of your funds. It's as simple as that. And so I think as far as like security, there's all these different security, identity, tracking, analytics. There's a whole macroeconomic environment that's going to shape itself based on blockchain technology.
So another thing that is very much sort of attached or not, I don't know, you tell me, is the concept of where blockchain, Bitcoin with IPOs and perhaps ICOs also. So maybe perhaps we can start with you and then we can go that way.
Yeah, so Spencer, you're going to have some great commentary on that. So my view on IPOs is there's a lot of froth. It's a lot of discussion. It was the primary topic of discussion at Consensus. I think this past year, Consensus is the blockchain event that's hosted by CoinDesk. They say that for startups, 9 out of 10 startups will fail. I don't think by having an IPO makes that statistic better. It might make it worse. Some white papers in which then you raise $30 million worth overnight or in a few minutes, 15 minutes, it's going to come back to roost at some point because the fundamentals of an organization, of a startup, of adding value to the economy have not changed. And so you're not going to buck those statistics just because you found an easier way to raise money. At some point, you're still going to have to deliver something, whether it be money, whether a product or whatnot. And the due diligence that you provide in a company, those fundamentals haven't changed either. You have to look at the founders, you have to look at revenue, you have to look at those things that don't change for a company, regardless of whether you have a crowdfunding or an IPO or raise venture capital funds.
Thomas, you want to add?
Yeah, one specific thing about these ICO is that a team who works on some type of new decentralized application, instead of going through venture capital, they can design an application in which you use a token that actually is the fuel, the blood for this application. So as the usage of this application and the utility grows, the value of the token will grow. And they use this token offering, this initial coin offering to solicitate, investors. They don't want to call it investors because it's not a security, but to get some people to crowdfund this project by selling this token. And it's a great way, in a way, to bypass traditional ways of financing, and you get some liquidity on these tokens very quickly. So it's indeed very interesting as a way to accelerate financing, to have better liquidity, and to have more people going on that. But it doesn't. There's always the fundamentals that you need to make sure that the project is viable, yes or no.
I know you have a lot to say about ICOs.
Yeah, absolutely. I mean, so in general, I guess, this is it's a brave new world. So buyer beware. There's a lot that we have to learn here still. Even ourselves, so at Blockchain Capital, we spend a lot of time looking at ICOs. We spend a lot of time digging through white papers and understanding these things. And we realize that even we still have a lot to learn, let alone the market as a whole, with people that don't have as much time as we do to spend on it. Overall, right, there's the protocol tokens that Tomas just discussed, which are, again, it's the token is native to a particular protocol or application. It's necessary to use it, and so if the application or protocol becomes more useful over time, the coin or token's value goes up. These are specifically not meant to be securities. In contrast, at Blockchain Capital, we actually just did our own ICO. We very much took the opposite approach, and instead of trying to take something that walks like a duck and quacks like a duck and tell everyone that it's not a duck, we just said, this thing's a duck. We said, this is a security. We're going to go through all of the regulatory framework that we need to do anyways. And the big advantage from a venture capital standpoint is that we were able to raise capital from 750 people in 80 countries around the world with an average or a median check size actually of about $1.2 thousand. So, if we think about what's been the big challenges with venture capital historically, it's been mostly access and liquidity. So mostly venture capital has been the realm of the financial elite, pension funds, endowments, this sort of thing. And then the big challenge has been liquidity, in that once you're usually in a venture capital fund, you're in there for 5 to 10 years. So, I think we made pretty big strides with being able to adjust both of those things. We weren't able to go quite as far as we'd like due to financial regulations, and we weren't able to open it up as far as we would otherwise like to. But it's definitely a big step in the right direction.
Awesome. Rebecca, welcome.
Thank you. Apologies for being a little bit late. I'm going to come at this from a little bit of a different angle because SkuChain does primarily enterprise-grade solutions using blockchain technology. So we're not really in the cryptocurrency world. But having said that, I just came back from Washington, D.C., where I met with, of all things, the blockchain Caucus. I had no idea this existed, but it's 7 Republican congresspeople, 7 Democratic congresspeople, and they're all people who were originally just very interested in Bitcoin. And they looked to China and saw that the Chinese regulators were doing a lot with Bitcoin, and how would US regulators work with that as well. And they saw a lot of pilot projects on the blockchain in Estonia, in Georgia, Sweden, and how can the US catch up to that? So my primary objective going there was to ask them, what are the sorts of regulatory questions that you had in mind? And an obvious one was, when you work with ICOs, what kinds of securities questions do you trip up? When does the SEC get involved in this? And as a former securities lawyer, I certainly appreciate the challenges there. But the encouraging thing I heard was that everyone is excited about this technological phenomenon. And the general perspective of regulators is that it can unlock a lot of benefits, but the industry needs room to grow. So this caucus has been set up to really understand the technology, to be able to, for example, if they happen to represent districts that are working on blockchain technology, to be supportive of their constituents, but to also just give us room to develop this, and then we'll just kind of wait and see what, if anything, regulators need to do to address the specific challenges that are brought up by cryptocurrencies/blockchain.
That's great, if you can, because my next question was very much, it's a good segue, that financial regulators, when you think about it, you sort of cringe, right, of what's coming. Do you see them being encouraging or discouraging, or where do you see that, all of them? And since you're coming recently from DC, where do you see, and what are the challenges, what are the hurdles do you see for blockchain to really become mainstream?
Yeah, absolutely. So I think on the whole, regulators are excited by a distributed ledger technology that is incredibly secure, auditable, and immutable. It certainly makes their jobs a lot easier. So their perspective is they're aware that this technology is still early days, and they've set up either these consortia or these industry groups where industry leaders get together and talk about what they would like to see from their regulators. And then the regulators are sort of the next step apart from that. So they're really waiting to hear feedback from the industry, which is a good position to be in.
Yeah. I don't know if you guys want to comment on the regulators. Any comment on that?
Like you, regulators.
Yeah, I think everybody's being positive and pretty much open-minded with just some basics for ICOs. It's okay. It might be a security one day. Just want to tell you, and also that you just have to make things with some kind of industry standards like investor protection, stuff like that. So pretty much open-minded. Just give some guidelines in some few steps, but. Again, it's still a gray zone in a regulatory standpoint, so a good opportunity also for new incumbents to take in when there's this gray zone and opportunities.
Yeah, I would echo that. I mean, we work very closely with Department of Homeland Security, and I think that everybody's pretty open-minded about it.
No, that's good to know. So my next thing is really shifting a little bit is looking at blockchain and Bitcoin and everything. When will we see this in mainstream, right? These technologies that we have, what is the journey? Is it 2 years? Is it 5 years? Is it 7 years? Where do you see the journey? Where are we in that journey? And maybe perhaps if you can focus a little bit on capital markets also. So maybe perhaps you can talk about in general and then zoom in on capital markets also.
I'm not a savant. I can't do predictions on markets or time. I'm not a trader. But I think that when we stop talking about it is when it will likely be mainstream, because fundamentally it is a technology. It's a technology enabler. And so when it kind of goes in covert and yet you're seeing that your payments are happening cross-border in a lot cheaper and a lot faster way, and that fees are going down for certain aspects of payments, and maybe fees are going up for large stores of value to move them around, that's when I think it will have hit mainstream.
Yeah, I think, well, it depends how mature is mature, but it was Bitcoin and, Bitcoin and other cryptocurrency were mature like 2 years ago for like some retail investors who wanted to safeguard some of their money, like a couple of $100 here and there all over the world. Right now, it's a market cap of maybe 80 billion, so...
That's pretty good.
Pretty good. So for sophisticated investors, it starts to be like interesting enough for them, because if they put like 100 million as part as their portfolio allocation.
So hedge funds are now getting interested in and actually getting part of it, right?
We see that as an indicator. Initially, only consumers were like, okay, I need a device to secure my private keys because it's valuable enough. And we're seeing more and more in the financial institution, hedge funds, asset manager on exotic assets, who want to have a solution to safeguard their private keys. Also some custodian service, who want to offer some custodian service for cryptocurrencies, or looking at solution like ours to safeguard the cryptocurrencies. So we see that there are some new type of actors that are getting interesting to that type of technology, and it will continue. It will get more mature to different type of investors as time goes on.
Yeah, so I mean, how does Bitcoin go mainstream? I mean, for me, I think that much of the industry has been focused on faster and cheaper. I do think those will happen. I do think there'll be important elements. I don't think it's what will drive people to adopt Bitcoin or other major digital assets. I think it's going to be because it's better. So I think it's going to be because you can do things that you fundamentally just can't do with legacy financial infrastructure. So, to not just use words, but to provide some examples here, two early ones are time-locked transactions and multi-sig transactions. So if you're not familiar, a multi-sig transaction, I can have multiple people literally own the same value. So unless we as a panel maybe agree to send a transaction, that money cannot move unless all of us sign it. That's something that you can hack on top of legacy financial infrastructure, but it's not native to it, right? Now it's literally a line of code in a Bitcoin transaction. So, for us, we see this as a natural extension of kind of the software eats the world thesis, right? This is now hours of man time that's been boiled down to a couple lines of code. Time lock transactions are another one. So I can send a transaction to anybody on the panel here, and I can specify it such that they can't spend it until a particular point in the future. And again, that's something that I can hack on top of legacy financial infrastructure, but now it's native to Bitcoin. And so those are two early examples of what I think will eventually be dozens and then hundreds of features. But I think it's that better aspect that pushes it into mainstream.
Rebecca.
Great. So on the enterprise adoption side, I would say that it has taken about 2 years for industries to go from knowing what blockchain was or having heard the term blockchain to having meetings with blockchain startups and not having to spend an hour on blockchain education before you actually get into the product offering. So that's a great sign of maturity. But I think in terms of going from pilot projects to a production deployment of the technology, we're looking at about 6 to 8 months. And that's with a committed industry player who really wants to implement blockchain in their internal systems. In terms of when blockchain technology is going to go mainstream, so the SAPs and Oracles of the world are going to have to worry a little bit, that's probably another couple years off.
I'll ask, maybe we can come back, two things. So not even about Oracles or SAPs, even if you look at, again, from a capital market perspective, the banks, exchanges, and I see that, again, from a financial services, I do see a lot of banks and exchanges actually getting into it. NASDAQ is a very, very aggressive in all that, which is great. But from your perspective, sitting in, how do you see their role, one? And then the second question, I'll just add on to that. So one is banks, exchanges, where do you see? And the second is, what kind of revenue model do you see building up in this whole blockchain world or Bitcoin world?
Sure. So with respect to the first question, I would say that banks have a couple entry points into blockchain technology. First is, what R3 was trying to do. So blockchain deployments within these banks. That's proven to be a bit of a challenge. The future of R3 is a little bit uncertain at this point, especially with JP Morgan building their own blockchain protocol. But having said that, I think the banks recognize that eventually they will have to adopt this technology. It's not like other industry players who are still waffling on whether blockchain is right for them. I think this industry is committed to the idea of it at the very least. That is a much longer road to realization. But banks have another way of participating in blockchain technology, and that's on the finance side. So either you play in cryptocurrencies or you start to think of other capital products that are unlocked because of the trustability of blockchain technology. I'm thinking of supply chain finance in particular, but there are many other examples. And then with respect to your second question about business models, so blockchain is fundamentally an open source technology for the most part, and there's some proprietary technology built on top of it. There are precedents for that kind of software, and so you'll see that the business models sort of repeat themselves. The most vanilla option is some sort of software subscription model where you pay a license to deploy this blockchain software. And then there's probably some sort of transaction fee where every transaction that flows through the platform, you take a certain percentage of it or you take a flat fee for it, or in some cases you take a platform fee. That's sort of the vanilla model, but there are variations on it. And I think there's a lot of experimentation right now among blockchain companies to figure out what model is right for them and, more importantly, what numbers are correct, because it's much easier to decide the structure, but the actual figures that will attach to it, that's a work in progress.
Yeah, I mean, I think I largely agree. I think it'll take quite a long time for banks to start replacing any kind of back-end infrastructure with blockchains. I think that's really difficult pill to swallow. I think that a lot of the regulations were built around the way that our existing infrastructure is built, and so trying to apply new infrastructure to that is really hard. It's a square peg in a round hole. Maybe a little bit sooner for digital assets in general. So, the potential of seeing Bitcoin on trading desks at large banks, maybe. I think that could happen sooner. And then as for revenue models, I don't know that blockchain is necessarily changing the types of revenue models that we see. I think we'll largely see the same types of ones. So, transaction-based has worked pretty well. I'm sure that we'll see some very successful subscription-based companies and, everything else that we've seen out there.
Yeah, I think for banks, financial institution using a blockchain to improve their back office and their processes. It's kind of evolutionary. It's about taking the existing and making it better, while using some revolutionary use cases in a way where you can use the technology to create some new stuff. That's where, some incumbents have something to play in, because first of all, it's very complex technologically. It's regulatory-wise, it's kind of a gray zone. So some financial institutions are pretty risk-averse. So and it's okay for startups to take that risk. There's these challenges for existing financial institution, because there's this risk, there's this technological shift, and this use case shift. That's happening, so it's going to be an interesting play coming in.
add anything to that?
Yeah, so as far as replacing existing infrastructure, I will eat my shoe if a bank actually winds up replacing their back-end infrastructure with blockchain technology. I mean, how many institutions and enterprises are still on SAP R2? Okay, a lot. And so to graduate from an SAP R2 to blockchain technology, I just don't see that happening in my lifetime. I could be wrong. But as I said, when that happens, when a significant one does wind up replacing their entire back-end payment structure with something that's blockchain, I'll eat my shoe. So there, I've said it out there. I see that...
Can I just ask one thing, and maybe you can add on the second thing, and perhaps we should then start asking questions also. But if I look at, and there was a question about, or discussion about Amazon prior also, if you look at Amazon, 1997 to where they are, we were having discussion that, me, my family, my kids, 11-year-old, everybody knows where to buy stuff. Yep. That's Amazon and not Walmart. I would feel that banks, I think they should learn something, right? And I think they are learning and they are being aggressive. So I feel they have to do something. So I totally agree. But do you see anything or any lessons learned, or you will eat your...
I still, so we get asked by a lot of banks, can we run it on premise? Yeah. Okay, so they still haven't bought into the cloud. Give me a break, right? And the only reason that they're talking about cloud now is because Amazon, as an AWS, came out with, 26% margins? And so now they're like, ooh, they have FOMO, right? Like, maybe we should have our private cloud instead of an open cloud. And so when I get asked about on-premise, my first thought that goes through my head is, you want me to deliver it to you on floppy disks? I just, as forward-looking as they say they are, I actually think that the disruption has a much higher probability of coming out of left field.
Okay. And very quickly, while you talk about the business model of how you would see going live from a commercial, also want to very briefly talk about open chain, permission and open chain, and then perhaps, please, for the last few minutes that is left, we can perhaps, if you guys have any questions.
Yeah, so I'm pretty strongly opinion on open chains versus permission chains. I think that both will exist because the analogy is very much akin to internets and intranets. Yeah. There are definitely, there's a use case for both. However, if you look at what is more disruptive, what are the barriers to entry, what is that, you don't assume anything on the open chains. And so, whereas a permission chain or a federated chain, there are certain assumptions that you've already put in place as to whether who are the players, what are those contracts to participate, whether you're just going to be running a relay node, whether you're going to be running one that's signing. So there's all those structures that have already been put in place, whereas on an open chain, there is none of that. And if you look at the whole vast majority of open chains, they come into two flavors, really. I mean, one is the Bitcoin family, and the other one is the Ethereum family. As far as open chains, there is going to be more. And they will solve scalability issues, privacy issues, all those things that the current open chains are still lacking in doing. I think that's where the innovation's happening.
Cool. Questions? I don't know how much time we have. We have 4 minutes. First question right here.
Okay, thank you all very much for some wonderful information. I'm pretty much a rookie at all this, but I've been trying to do as much homework as I possibly can. So I think Catheryne, you'll probably be the best one to answer this question. How much effect or effect, and maybe that's what you're talking about as far as the open, or I forgot what the other term you were using.
Permissioned.
Yeah, is that having to do with the patents that are being taken out on blockchain? That's my question, is what are the effects and effects of this kind of rush to patents that I'm starting to hear and see about, like Goldman Sachs and a few others? If you can comment to that, I appreciate it.
It's a little known secret, but actually AWS put out one of the first blockchain or Bitcoin blockchain patents on that. There is a huge rush for that. I think the ramifications, I can't even begin to predict what's going to happen, but at some point, everybody's going to claim they have IP on it. The nice thing about the open chains is they are open source, right? And so there's not really patent that can get issued on that. So that's, I also think, why I have much higher hopes for open chains than I do for all the permission chains in which everybody's scrambling around to get a patent issued on.
And also a good thing about these kind of changes, they run by themselves, and you don't have to, you cannot shut them down, and you cannot show the Bitcoin network. You cannot sue the Bitcoin network or the Ethereum network with a patent. So Bitcoin and Ethereum doesn't care about in some ways.
So I have a question for the entire panel, and you can go down one by one, but wanted to know what's an interesting, unique use case for a smart contract that you've heard of that you'd like to share with the audience?
Well, I think running it will really start, I guess, with some stuff that you cannot do in the real world, and a smart contract against, for example, prediction market. Is something that is gathering some attention and a bit of traction. It's still, I think, in beta phase, and it should be live fairly soon. But yeah, you cannot do it in the US, you cannot do it in a lot of jurisdictions, and you can have like a smart contract that runs on the cloud, that self-executes itself, and that does some prediction on any event. So that's one that is going to be pretty nice pretty soon, I guess.
Anyone?
I guess I'll go with the ICOs. I mean, right now it seems to be the dominant use case of smart contracts. I mean, if I look at what's being used on Ethereum, it's ICOs. So, easy answer for me.
I guess I would have an easy one too, just coming from my day job, which is trade finance. And the way that it works right now is we're starting to incorporate the Internet of Things. And so sensors and the data that comes from sensors, they get incorporated into smart contracts. And so you automatically get self-executing supply chain contracts, which is a pretty exciting use case for us. I'm sorry? We'll talk privately.
So one last question. Anybody at the back? Anywhere? Going once, going twice? Oh, right there, all the way up.
Sorry for making you run. This question's for mostly for Rebecca, but for the rest of the panel. And going to what you mentioned about the folks, our dear friends on Capitol Hill, what's your thought on the regulatory path? Given that fintech is a very sensitive area and one that's attracted a great deal of regulatory scrutiny, how willing do you feel the regulators are going to allow this new technology to operate fairly free form in the marketplace until it gets subjected to similar scrutiny that the banks do?
So thank you for that question. I think the answer is different depending on whether you're talking about cryptocurrencies or whether you're talking about blockchain technology that is used by the financial industry. So I'll take the first one first. So with cryptocurrencies, I think the US has sort of been slow to act on this, and that's not necessarily a bad thing. But they see that in China, for example, for reasons that don't have anything to do with the regulatory environment there, Bitcoin has really taken off there, along with other cryptocurrencies. And now the regulators have an opportunity to do something with that market because they're such a dominant player. And so I think on our end, I think the US regulators are asking themselves, did we miss something here? Is it too late to sort of have our hand in this industry? I don't think they've answered that question for themselves yet, but it's one of the reasons why they set up things like the blockchain caucus, to have more opportunities to engage with this community and understand what's going on. As far as blockchain technology that's adopted by, say, financial institutions, I mean, it can be adopted by many other industries, but they're not as regulatorily sensitive. With financial institutions, I think there's a general feeling of optimism that blockchain technology is going to have a lot of benefits for regulatory purposes. I think the interesting thing will be where most blockchain startups that are playing in this space, or most banks definitely, are in constant conversation with the regulators to make sure that they're not overstepping any obvious bright red lines. So I think, so far there's been a very healthy environment. Oftentimes when people think about, how regulators relate to technology or to Silicon Valley in particular, they think about the battles that Uber has to fight or that Airbnb has to fight. But this is very different. That is consumer side, where theoretically, if you get everyone in your community to use Uber, you can get away with a lot of illegal stuff. Not saying that Uber does illegal stuff, but for example. Whereas with blockchain technology, there's that open dialogue because there's no such thing as a viral enterprise app. Cool. So you need to have that constant line of communication in order to make sure you're building something that can actually be sold.
Cool. Final 10 seconds. I know we are running overboard, but if you guys have final thoughts that you want to talk to the audience.
Yeah, so I think that as much as I love Bitcoin, I think for everybody who thinks they missed the boat on that, the best is yet to come in other open blockchains, and we'll see that coming in the next few years.
Yeah, very bullish. A lot of stuff that are going to happen. It's really just the beginning of a great technology. So get interested in the space for sure. It's going to move on.
Yeah, I would echo both those comments and just say keep an eye on Bitcoin. It's oftentimes written off now. It's just it was the old, slow one. Network effects are really important in this industry. It's not without its own challenges. It's not to say that everything was created perfectly the first time with Bitcoin, but I would keep an eye on it and stay closer to it than most people otherwise suggest.
10 seconds. Rebecca?
Yeah, just to say that I agree with all of that. I mean, definitely consensus this year, I think, had a much more serious and urgent flavor than it did in previous years. So yeah, definitely bullish on it.
And I say the same thing. We play in 4 areas: news, tax and accounting, legal and financial services, and we see all those areas very, using your word, bullish in those things obviously at the right time. I want to thank the panel. It was fun moderating. It was great, and you guys have been a great audience. Thank you very much. Thank you.